Okay, so we are recorded. Let's get it started. All right. Today's masterclass is about how to go about another way of real estate, my people. We are speaking about not being the landlord, but being the bank using real estate with none other but the best that does it, Miss Coach Rosie. Now I have the screen shared for you, Miss Rosie, so you could share your screen if you need to. If not, I'm going to just pin you right here. Alrighty. Thank you so much for coming, Miss Rosie. We had a great live on Friday, giving people an introduction of what today's class was going to be about. And I'm gonna tell you now, it was a lot of people interested, very interested in what we were talking about. But being Sunday and a lot of people have families, some of them have to come and catch the replay. So I told them they're not gonna miss too much because they'll be able to see it around Tuesday or Wednesday. But for those that are here, Miss Moody, Ghost, and a few others, I just want to say thank you for showing up and let's get this party started. The floor is yours.
All right. Thank you, Ola, so much. I appreciate being on tonight. Hey, guys, so good to see you. All right. Thank you for coming because it tells me that first, you're interested in real estate. Secondly, you're hungry. And I like both of those, being hungry and real estate. So it is a pleasure to be on this platform with my guy, evolutionary mind guy, Ola. It is great to be here. And I certainly appreciate the opportunity. So I think where I'm going to start, I was going to show a PowerPoint, but you know what? I think I'm going to give you everything that's on the PowerPoint. And certainly I want to open for questions, so I'll leave some time. We'll have plenty of time for you guys to ask questions. First, I'll start out by just telling you a little bit about myself. Um, and then we'll move more into what this real estate journey is all about because my journey, how I started, is very relevant to what we're going to talk about tonight. So the first thing I want to share with you is my name is Coach Rosie, and I have been a coach for a very long time, an entrepreneur for a very long time. So probably almost 40 years of entrepreneurship, having different businesses, and you know I remember at the age of 16 is when I first had my epiphany of the business. And that was my first job working for a grocery store called A&P. And some of you may know A&P. And that was my first job. And I was a cashier. And, I worked after school and on weekends sometimes, except Sundays. I never wanted to work Sundays. And I recall after being there, several months, we had the old machines, the big, heavy industrial cash registers that you had to push really hard on the buttons and pull the handle like those old slot machines. And one night, during the course of my working those 4 to 6 hours, um, the manager would come around and they take money out of your drawer, right? So we had to always put the 50s and hundreds underneath the drawer. And then, you had your fives, tens, ones, whatever. And they would come around and they count some of your money, make you count it, and then they take it and take it upstairs. At the end of the night, we had to pull our drawers and we had to take our drawer upstairs and we had to count the drawer. The manager counted the drawer. And I remember this particular night, I walked up there. I don't know why I paid it so much attention that particular time, but I walked upstairs with this drawer. I walked in, but I saw all of this money going all around the wall. They had like shelving going around the wall. And it was money, 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 just stacks of money that they had already counted and rolled. And so I'm I'm walking in there and I said, wow, that's a lot of money. And she counted my drawer, and I don't remember, how much I had made that particular evening. but I know I had already given her probably, close to $2,000. And she handed me my paycheck. And as after we finish, I, open my paycheck up and I'm walking out that door. And my paycheck was like 100 and something dollars. And I thought, wait a minute, they had a lot of money up there. And all I got was 100 and something dollars. And I said, I want to do what they're doing. That was my very first epiphany about entrepreneurship and how someone can be making all of this money and paying someone else the hourly wages to work for them. And I didn't know, of course, at 16, I wasn't sure of how to go about starting, my own business. Didn't know, can't think of anyone who had their own business. And so it turned out that years later, in my 20s, I bought a house, and I think I was about 24 or 5, somewhere in there. I bought my first property, and I began to rent that property out. I thought, this is really great. The first few months were beautiful until I started getting calls from neighbors about the tenant. And then I started getting calls from the tenant about the house. And then I started getting more calls about the house. And then the tenant would move out. Of course, I had to, call people to fix things, right? And then the lease was up and the tenant would move out. The house was in shambles. And then I had to go in, get someone, because I'm not the handy guy, right? I had to get someone to fix all of the things that were wrong. And every time someone moved out, I had to do that. I don't know about anyone else that's on this call tonight, but I hated that. Absolutely hated it. And I said the other night with Ola, I said, I recall hiring all different ages, or hiring, I'm sorry, I'm thinking about entrepreneurship, but I began leasing the property out to different people, different backgrounds, social, economic, all of that. And no one was a good tenant. Like, when I say, every time they talked very well, they, looked good, but then they were real dirty. They made a lot of noise. They was always having parties. And then finally, the last person was an older woman, and she had to be like in her 60s, and she had 2 grandchildren that she was taking care of. And she seemed like the sweetest woman ever. Within 2 months of her being in the property, my neighbor called and said, I don't know how many people you rented this house to, but there must be 15 people living in there. And I was like, what? And I went a couple of days later over there to talk to the woman. And she said, it's just me and my granddaughters. And I said, well, it's almost time for me to do the inspection. I'll be back to do the inspection next week. I went to do the inspection, and you could clearly see she was trying to hide like mattresses. So I think what she was doing was she was basically subleasing to other people that she knew, and they were staying in the basement. So it was like 5, 6 people. And it was like all these twin size beds. This was before blow up mattresses came out, right? It's easier to hide those. So I said to her, I've been getting complaints about, all the noise, and there was a lot of people. She says, well, we had a birthday party. I mean, she gave me all of these, excuses. So I said, well, you can't make so much noise, blah, blah, blah. And I go back and forth. She was actually my very worst tenant ever. And when she left holes in the walls. She left toilets dirty. She left, I mean, when I say dirty, I'm talking about dirty, dirty. She left the heating radiator was broken. It was as if she meant to do all of that. And I thought, when I get rid of this lady, I'm getting rid of this property, right? I cannot, I'm in my 20s. I'm not interested in all of that. And she turned out to be the very worst tenant I've ever had. And she was actually my very last tenant. Because again, I do not like being a landlord. I had horrible experiences with that. And so I sold the home, and years later, many, many years later, I ran into a gentleman who became my mentor when he talked about how you can become, he didn't call it become the bank, but that's what I cloned it as when I realized what was going on. Um, he said, you could sell a finance. You don't have to be a landlord. And I thought, what? And he already had, I don't know, probably 50, 60 properties and collecting mortgage every month. And so I thought, I can do what? Wait, how do you do that? And I always wanted to get back into real estate, but the only way that I knew of real estate was everyone I knew was always, a landlord. And so he began to teach me how to do seller financing. And when I say it became the sweetest thing since honey and a honeycomb, and I have been doing that ever since. Now, what am I saying about the landlord aspect of it? It's okay for the people who do not mind being a landlord. And there are many systems that folks can put in place now that, of course, when I was in my 20s, there was no such thing, right? We didn't have all of these social media platforms and apps and all of these things. But now there are, plenty of apps and things that you can do to systematize a lot of, what a landlord would have to do, which is great. And I talk to people who are landlords all the time. But the issue is they still have to get a call, right? Whether it's from their management company, whom usually they're paying 10% for managing the property, or someone else. So there are no maintenance requests that go out without the owner knowing what they are, right? So they're still going to call you so that you can approve, all of the repairs that need to be done. And so for me, I still don't want to get those calls. I still don't want to know that I've got to pay. The management company is going to call me and say, oh, they're moving out. You're going to have to, go in and do some maintenance on the property, right? Got to do some repairs. I still don't want those calls. I don't want to know anything about the roof, the toilet, the sink leaking, nothing. And so, what I do, you never have to worry about those things. And how many people are excited if I can show you tonight how you can do that? Put it in the chat if you're excited. Put a 1 in the chat. If you're excited that you tonight can learn how to do that. Hola, Karen Brown. All right. Absolutely. Absolutely. And I want to tell you because again, it's been the best thing since honey and a honeycomb. So let's get into it for a second. If you have ever bought a car, if you've ever taken out a loan, any kind of a loan, if you have ever bought a property, taken out a student loan, right? That is, in essence, seller financing. And what is seller financing? Seller financing is a company that will finance your debt for you. Typically, it's a bank, but certainly it can be hard money lenders. It could be a friend, right? It could be anyone who has enough money to provide you with the service or the opportunity to buy whatever it is you're looking to buy. And by seller financing, they are putting up the money, whether giving it to, the person that you're buying the car from, they're giving that money to them. And then you in return promise to pay them X amount of dollars per month plus interest. And there may be some other contingencies depending on the type of loan, whatever it is that you are purchasing. So through seller financing, when it comes to real estate, you become the bank, or I am a bank. I buy a property, own a property. I take that property and I finance it to a family. Generally, I like to buy 3 bedrooms, 1 bath. It could have 1.5, but that's the norm. 3 bedrooms, 1 bath. And I take that property after I've purchased it. If it needs renovations, I have someone do all the renovations. And then I finance that property to a family. That family will pay me X number of dollars per month with interest. Now, the families that I generally will reach out to or target would be families that desire to own a home but cannot purchase conventionally. Conventionally meaning they cannot go to a bank or banking institution to get that loan to purchase a house because, of course, the credit is not what it should be. So when that happens, those are the people who have jobs. I look for folks that have worked on their job for at least 3 years. And of course, they have to be able to afford the mortgage, right? So what I want to talk about is once you've targeted the family and you've taken on applications, which is what I do, just like the bank does, you take on those applications, then you'll decide who you're going to finance that property to. Once you've done that, you have your attorney to send out all the paperwork that they'll need. They'll sign all the documents, just as you do when you do a conventional loan. So now that in the beginning, I was a real estate investor, right? When I bought the property, I was a real estate investor. When I financed the property, I became the bank. How many people want to learn how to become the bank? Right? So I became the bank. Once I financed it, I found someone to finance the property too. Now, once all of the paperwork has been cleared and everything is done, what happens next is they will begin to make payments to me every month for 30 years generally. Most people take out the longest period for their loans. Anybody guilty of that? Right? Most of us, they'll say you can do a 3-year loan or you can do a 5-year. 5-year, you're going to pay 227. A 3-year, you're going to pay 279. It's not a big difference, but for some reason, we tend to go the long stretch, right? For that, to save that extra 40 something dollars, right? And we're paying the interest though on that for 5 years. Now, depending upon what your interest rate is. So, what I want to show you, and I'll pull it up in a second, when you are financing that property, you become the bank. The bank is no longer interested in that home as far as anything that happens to it. It could burn today. They require that you have homeowners insurance. If you do not have homeowners insurance, they still get paid. Why? Because you still have to make that payment, right? What they do is they require that many times insurance is included in the mortgage, right? The taxes, if you're in a state where you're gonna have to pay taxes, the taxes are usually included in the mortgage. They don't have to be, but most banks want that. It's because they want to protect their asset, right? They want to protect it. So for someone that has bad credit, put in the chat what you think today that interest rate would be for them because they have bad credit. Just put something in the chat for me. All right. All right. 30%. Miss Moody said, I'm going to get you. 8%, 15%. Listen, generally, she put 30%, and we're laughing, but there are some people who will charge you 30%. You can get that home, but I'm going to charge you 30%, right? That you can do that because credit card companies do that, right? 27, 29.99%, right? So it can happen. 15%, and Issa said, hey, Issa, yeah. So think about this for a moment. You're the bank. Depending upon what the interest rate is currently, you can charge above that. Now, because you're the bank, you get to decide what that's going to be. You get to sort of decide. Now, when I say you get to decide, 30%, I mean, again, we want to put people in a property, right? We want them to be in that property and we want them to stay. 30%, they'll really notice that, right? They'll be like, I'm giving a lot of money to these people, right? And I know I wanted this house, but after a while, they'll probably want to give it back. However, at 15, 12, 10, 8, most people will do that and not really think about it. Why? Because the emotional tie to ownership is always greater, always greater. The emotional tie to ownership is always greater. So now that you've got these people in this property, what happens next? Because you're not getting the calls, you're not, having to deal with anything with the home. You're now in the note business. So you went from being a real estate investor to becoming the bank to now becoming what we call a note investor. Now, a note investor is the paper. It's the paper trail of that property, the paper trail. So let's talk about that for a moment, because a note is created when they signed on that promissory note that they were going to pay every month X amount of dollars at this percent interest rate, right? That they're going to do it by a certain date during the month. They're going to pay the interest rate. They're also going to get the insurance, right? All those things. So now you're in the notes business. You're in the paper business. You're no longer in real estate. You're in paper. And the paper is where the money is, right? Because you can go and sell a property, and a lot of people do, fix and flips. And they buy it, they renovate it, they flip it, and make 50, 100, whatever it is off of that property. Basically, what happened was they sold the paper to someone else, right? They sold that note to someone else. And in seller financing, you can do exactly the same thing, right? You can flip a note once you have, and many of you, if you own a home, you have more than likely received, probably 6 months into your mortgage, a letter saying this is going to be your new mortgage company, right? They sold the note to the other company. So banks, they don't want to be too top heavy with too many notes. So they start to sell off some notes, right? So they'll sell notes